Hey everyone, welcome back to another video. Today we are bringing you a video on deferring your capital gains tax. So we know that real estate is a huge investment. From the majority of people, it's their largest investment. So we want to tell you a couple ways on how you can actually save money from just paying it all to taxes as soon as you sell your house. So there's a couple options and we're going to go over them with you today.
Yeah, so there's actually 6 different ways that we could help you in deferring your taxes. And so there's 6 different strategies, and we work with people that are able to help you with that through our financial planners, our CPAs, and etc. So just an example of a few of those is, one is a 1031 exchange. So that's for if you're selling your investment property. It can't work towards your primary property. The other 5 ways can work with your primary property or investment. But with your investment property as a 1031 exchange, that's where you're exchanging from one property into another, or one business into property and so forth. So what you can do, let's just say you're selling a property at $1 million, and even though you bought it, say at $200,000, $300,000, now it's worth $1 million, you can go ahead and buy either one property, 4 properties, whatever, accumulating up to that $1 million or higher. And you could actually do it lower too, and we can get into that. But for easy information, you can just go ahead and defer it over there, and you don't have to pay any taxes from between when you purchased it at $200,000 on that $800,000 difference. So it gets deferred till later.
Yeah, so that's a great option for investment properties. I kind of want to go over some personal properties as well. So there's a structured installment plan. And this is kind of a setup where the buyer would normally pay the seller, let's say $1 million, and you'd have to pay taxes, capital gains tax, on that $1 million that you received from the sale of your property. But instead, we're going to have a third party hold the money for you, and in a structured installment plan, they would pay you a portion of that. Let's say over 10 years, you get paid $100,000 a year over that 10-year span, and you pay your capital gains on a yearly rate at that rate versus paying in the $1 million tax bracket. So that's a great way to kind of defer that over a period of time. And there's also another way that I really like, and that is the intermediated installment structure. And how that works is you, instead of getting paid that the $100,000 each year, they would keep the lump sum. So that would be the full $1 million. And then let's say it's over 10 years again, they would be investing that $1 million at, let's say, 5%, and you would be gaining that 5% every year. So you'd be paid $50,000 every year rather than $100,000 of your lump sum. And then when that note matures, when the time comes, then you would get that $1 million back, or however you want to structure that. So that could be either 10 years if you want it longer, you could do 15, 20 and extend that. And it's a great option for seniors who are looking to sell their property and maybe going into assisted living or any situation like that.
Right, absolutely, absolutely. So again, we're here as your real estate resource here in the Bay Area, and happy to help you go through any plans that might help with your investments. And as always, if you have any questions regarding real estate or just things to do in the Bay Area and so forth, put your comments down below. Feel free to contact us. Make sure to like this.
Yeah, and we hope you guys enjoyed this video. Be sure to tune in next week, hit that bell notification so you're notified every time we post, and have a great rest of your day.
Take care and God bless.
Bye.